This is the big controversy that we're facing for 2025. It's quite easy to say, the Fed will be cutting today and we slide into 2025. But then, of course, we have the new administration coming in with a huge array of policies. And if we take these policies at face value and you really do get these tariffs, then at some stage in the second half of 2025, there's a clear risk that inflation will actually move higher, forcing the Federal Reserve to either stay put or, even worst case scenario, actually start increasing interest rates. So there's a lot of uncertainty on that front.
Staying with the U.S. policy, the tariff target could be China.
Yes.
Do you like China? Because, sure, the tariff risk is there, but they could get more aggressive with their monetary and fiscal policies.
Yes, so this is a very difficult time for policymakers in general. We'll have to wait and see what happens on January 20th and thereafter. I mean, our general feeling is that a lot of this rhetoric is a negotiating position. But of course, to say that there will be no tariffs at all also seems unlikely. China has kept some of its powder dry in terms of what it can do more on the fiscal side and on the monetary side to counteract that. Also, some people are arguing that a further weakening of the currency to buffer some of those losses. A lot of things could happen.
You still like Japan and India, though, because they're sort of less exposed to tariff risks. Is that the reason? Or is it corporate value up? Is it valuation that's not so aggressive right now?
Yes, so Japan we think, is a structural story of, the next 5 years, basically, where they've successfully moved away from the legacy of deflation to a reflationary environment. It's not just share prices, which are higher in Japan, there's also real estate. So you have a broad reflationary phenomenon taking place, which we think is very attractive. India, it's all about growth, and more growth. So they're going to grow 6.5% this year, probably the same next year. It's the highest growth rate amongst peer economies out there. Valuations are expensive, but we think it's worth it.
Corporate value up in South Korea. People were going to look into that. They were taking an interest, and then this martial law and impeachment happened, and not to mention the tariff risk that South Korea is very much exposed. Are you interested because of the valuation story? Because some people have been saying that since the martial law.
Yeah, and it's also, the predominant sectors that are so appealing in South Korea. So it's a major technology play. We're very positive on mega cap technology, not just in the U.S., but for the entire AI ecosystem that is coming to the fore. That's going to be a huge area of growth. Our approach, though, to investing in this is kind of also the so-called picks and shovels idea. So investing in the companies that supply the physical infrastructure to cater to that phenomenon.